We think the role of defensive equities are particularly for people approaching or in their pension phase. Equities are important for people in that later phase of their investing lives because we're living for a long time. People need the growth and the income, but equity investing comes with drawdown and sequencing risk, which apart from the impact on a portfolio, can cause people a lot of mental anguish and discomfort late, when you've stopped working. You just don't want to go through that. So the role of defensive equities is to say, look, these positive attributes of equities, good level of income that grows, capital growth, can you take those while diminishing those negative aspects of drawdown in negative markets and sequencing risk? So that is the role defensive equities tries to play. I think it's a really important question to ask. I'd say there's probably three. First of all, I'd say that just simply seeking the highest dividend yield on, say, next year is a potentially really bad outcome. All else equal, high yield means high return. We did a lot of work just tracking the highest yielding stocks over a long period of time. We perhaps a bit unfriendly named that the dumb yield portfolio. It typically showed that it was quite highly volatile, and when you had significant drawdowns, it performed quite badly and it did not recover its capital value very well. So we don't think people should simply target high yield. Secondly, we'd want to caution people about a permanent use of derivative and heavy structuring in these types of products. We think that those derivatives or more complex structures can play roles in particular markets at particular times, but we think that the evidence has shown that if you employ those over a long period of time, your total returns really do suffer. So we think that's something people should think about. And thirdly, perhaps on the other side of the fence, people often respond to the fear of losing money by having a far too high cash allocation. We've seen that with self-managed super fund asset mixes, which just on a long run basis have far too much cash in them. So I'd say those are the three things we think people really should focus on and think about.